right, good morning, everyone. Wanted to welcome you back to, JRBT Tax Talk number 2. We wanted this morning to kind of give you some updates after our webinar that Connie Berry and Michael Brown here did last week. So we're going to definitely want to continue these talks as we talked about Thursday, and so today is that second session. We'll hopefully answer some of your questions and give you a little new information that we found out since Thursday. This webinar obviously is going to be recorded and is being recorded. It'll obviously be on our Facebook page, but in addition, we'll have it on YouTube, we'll have it on our LinkedIn page, and you can always go to the JRBT website to find any and all of these videos that we are producing. So with that, my name is Bob Woodard. I'm a tax shareholder here at JRBT and specialize in closely held family businesses, auto dealerships, and real estate in the tax area.
I'm Michael Brown, also a shareholder here at JRBT. In the tax area, also in business valuation, forensic and litigation services.
All right. Quick disclaimer, obviously, reminder that this session is for informational purposes only. It does not take the place of any specific tax advice from your JRBT tax advisor. And we strongly urge you, anything you hear today, to contact them to kind of get your specific situation, because every single client, every single taxpayer has a different situation that is going to be really important to have that individual advice in all those things. But also continue to get updates, because the SBA, Treasury, IRS, as you're going to hear today, every single day continue to put out more information about this, and it's just changing faster than we can even
have to go check it every single day.
Absolutely,
see what's new.
We want to start off today, though, with some interesting facts we found interesting. Maybe we're just accountants and we're nerds with numbers, but we're okay with that. We can handle that. But as most of you know, the first round was about 300 of PPP loans. Was about $350 billion. And they've come out with some of the stats as to where we're at. And the average loan size in that first round, Michael, was $206,000. So the average employer or the average business got a $206,000 PPP loan. And what's interesting about that is, out of that $349 billion, really about 75% were $150,000 or less, and the other 25% were over that. Now, in this second round, our average loan size is right now in the second round of PPP, which started last week, I believe.
Yeah, it ran from Monday through, and this was as of Friday.
This was as of Friday.
The first week of
the
the second
week,
round.
We had the average loan size was only $79,000. So the first round was $206,000. Now it's only $79,000. And so interesting that we would have so many more smaller loans. I guess we kind of expect that, but
yeah, one of the things is that the entire time for the first round, the first section or period of time was for businesses, for partnerships and corporations only, and sole props got their applications began a week later. Mm-hmm. So some of that is bigger businesses skewed on the front end. Some small businesses think they were passed over for bigger businesses, and maybe that was the case with some large national banks.
I think so.
Potentially.
Yep.
It's pretty interesting, and so far, as of May 1st, there was $175 billion of the second round, which totals $310 billion, had been authorized. So the program's still going. If you haven't got one, still get one.
There's still plenty of time. There's still plenty of money. As Michael said, we still have
a little less than half.
A little less than half left, but that's still somewhere close to $150 billion as of Friday left in money out there for small businesses to go get these PPP loans. So just because you haven't gone out there and gotten it with your banker, there's still time. You still need to do that. So one of the other interesting things that we found was Texas. We got a kind of a breakdown by state. And just kind of let everybody know, Texas led the United States in number of PPP loans. So we actually had, in the first round, we had 134,000 PPP loans. It was about $28 billion came into Texas businesses in the first round. And now in the second round, again, as of Friday, we'd already done 175,000 loans, which is more than the first round.
In a shorter period of time.
In a shorter period of time. And just under $13 billion of money for our Texas businesses. And so therefore,
Yeah,
a
our
lot,
average loan is
obviously,
the second round
really
is a lot
small.
smaller, which
Lot
is good.
smaller.
It means
Yeah.
the small businesses who need it are getting it.
It's those small guys who really need the money to get
Right.
to keep food on the table and keep
Right.
paying their couple of 3 employees that really has helped do that.
And something I mean that these numbers tell me is that, you know, by the number of loans and the fact that smaller loans are going to Texas employers, that Texas local community banks have done a fantastic job with this program.
They really have. Our Central Texas, the ones all the guys and ladies that we work with in our local banks have done. Man, they've worked hard. I tell you what, we always make fun of bankers and their banker hours. These
Some
guys,
of them pulled all-nighters, I
they
know
did.
for a fact.
they found some accountant. They found accountant hours.
That's how we work, right?
Maybe they'll feel a little bit more for us next year in tax season. So.
Maybe.
But just some really interesting information. Let all of you know kind of where we stand. But again, the biggest thing we wanted to give you as a takeaway there is there's still money left. So all these things we've been talking about, the PPP loans, if you haven't had an opportunity to do that yet, we certainly want to make sure and encourage you to reach out to your JRBT tax advisor to kind of get advice on how to get started, and then contact your banker. Hopefully you have a good local banker that you can contact that can kind of help you with that loan.
So the big development in the last couple of days, I guess it was maybe Monday, yesterday? I think it was, or Friday.
It was Friday late. I think it was Friday
late Friday.
Yeah.
IRS issued a notice, their notice 2020-32, which in effect is the IRS saying this is how they're going to interpret this law, okay? And so we know that the PPP forgiveness portion is not taxable income. Well, the IRS has interpreted the existing law where there's a provision that provides that expenditures that give rise to tax-free income are not deductible. And so the IRS is interpreting, applying that provision of the pre-existing tax code to say that while the PPP loan forgiveness is not included in your taxable income, the deductions related to forgiveness are also not taxable. Are not deductible.
Yeah.
That's not what we expected to happen.
Right. And Congress basically kind of told us that this was not going to be taxable, and they kind of stopped there.
Right.
Which kind of gave us the idea that meant the money wouldn't be taxable. But now if we limit the deductions, haven't we just made the loan taxable?
Well,
in effect?
Effectively, you've eliminated the benefit of it being tax-free.
Right.
You're not including it in income, and you're not deducting the deduction, so it becomes a wash rather than effectively a tax benefit as the way we had originally thought it would be. Now, since this notice came out, some important members of Congress have come out and said that's not what we intended. So far, we know that Senator Grassley, who's the Senate Finance Committee chair, and Representative Neal, who's the chair of the House Ways and Means Committee, have both said that was not the intention. IRS, you're misinterpreting this. Representative Neal has gone as far to say that we intend to get a fix for this in the next round of relief. So we'll see.
Yeah.
It'll take an act of Congress. So
well,
we'll
I think the IRS has correctly interpreted this. The way the law is written, and the IRS purely, and is very consistent always, they follow the law that Congress gives them. And
right.
I think the laws that
whether
Congress
it's misstated or not.
Now, did Congress
We've seen
mean to
that
do
in the past.
that? Sure, or they may or may not have, but that means Congress is going to have. That's happened a lot of times in the past.
Right. Well, essentially, it would have required the statute to be more specific in order to allow the deductions, whereas Congress must have seen it was implied. I mean, we know, like in the Tax Cut Jobs Act of 2017, there was a drafting error in the final act, and IRS interpreted the way it was written, not the way it was intended.
Right.
And so we've seen this before with the IRS. Hopefully, we can get Congress's original intent in a future bill to clean that up.
But as of now, those deductions
Are not deductible.
will not be deductible in your 2020 tax return. But
Right.
stay tuned. Again, as we've said with everybody, every day there's new information, and hopefully we'll be able to give you an update later that tells us that it's going to be taxable. So, or not, it'll be deductible. Sorry, that the deductions will be deductible. Sorry.
Yeah.
So what we wanted to now do is we talked about, Michael and Connie on Thursday talked about those FAQs from Treasury, and we wanted to go through a couple of those, and some that were already out there as the time that you guys did your talk on Thursday,
Right.
some of which are new.
Right.
And so, but some of them that we hear over and over from clients with questions we want to kind of go over. And one of those questions is the question from Treasury, these are Treasury, so
The
Treasury Department
Yeah.
has said the CARES Act excludes from the definition of payroll costs any employee compensation in excess of an annual salary of $100,000. So that's the $100,000 rule. You can't get anything forgiven for any employee that you pay more than the equivalent of an annual salary of $100,000. The question is, does that exclusion apply to all employee benefits of monetary value?
Right. So the answer to that is no. The compensation, the cash compensation, is limited to $100,000, but the benefits, healthcare and retirement benefits, are not limited.
Right.
So you get the $100,000 plus healthcare and retirement benefits. You don't have to cap those things either, or exclude those things for the highly compensated individuals.
Okay, so we do get a little bit more than just the cash. We don't have to worry about it in our compensation planning, our retirement plan, health insurance. We just have to take all of those, no matter how much.
That was something we were worried about in the beginning,
absolutely.
but they clarified that, and it makes it a lot more simple to compute by not having to cap those things.
Okay. Another one we want to kind of go over, have a lot of questions on sick leave. Does PPP loan cover sick leave?
Yes, that's part of compensation to an individual, so it is includable.
Okay. And then that, pretty straightforward. Another question is going to be, how do the borrower account for federal taxes when we're looking at our forgiveness? How do we look at what payroll costs are included and what payroll costs are not included in our payroll costs definition?
Right. So when we look at federal taxes, there's employer taxes, there's payroll taxes, which have an employee component and an employer component, and then there's also federal income taxes that are withheld from the individual. The simplest way to say it is the thing that is excluded is the employer half of the payroll taxes. The other parts that are withheld from the salary are included. It's just the employer portion on top of that that's not. And in addition, it allows for the inclusion of state taxes on the employment. So in Texas, we don't have a state income tax, but the TWC, the state unemployment tax, that is allowable.
So basically, we're going to get our payroll, the payroll cost, the gross wages, which include the employees' payroll taxes and the employees' federal income tax withholding.
Right.
It's also going to include the TWC amount. That is an employer tax.
Right.
The employer pays that.
But consider
that
since
part
it's state, not
state.
federal. Right.
So therefore, what about the federal unemployment tax we pay?
The federal employment tax is not included.
Okay. Just the state of it.
Just the state.
Okay.
So yeah, essentially, you're not including your federal employment tax, and you're not including the employer side of the payroll tax.
Okay. All right. Okay. Another question we kind of wanted to go over was the amount of the forgiveness depends on our 8-week period. And Michael and Connie talked a lot about that 8-week period last week, but let's kind of go over again. When does that start?
Starts on the day the loan is funded.
Not whenever I got approved.
Right. Not
It's the day the money hit your bank account.
Right.
Correct?
Correct. The day it is funded into the account, not the next day. It's that day.
That day.
And so we still have a big question on the paid and accrued of, okay, so we funded one day and we had a payroll the next day. Well, they all earned that payroll before that.
Right.
We still don't have an answer as far as the timing of that. However, if you consistently apply it on both ends of the 8-week period, you're going to get 8 weeks worth of payroll.
Right. But we do need some more guidance.
We do need more guidance. We can argue what should it be cash basis, should it be accrual basis all day long until we're blue in the face because we're nerds and we're accountants.
Right.
And that doesn't mean anything for any of those people.
No.
But you just want to use one approach consistently.
Agreed.
Until we know more.
Okay. One of the big topics in the tax community, at least, has been do businesses owned by large companies. Basically, the concept that Treasury came out and said those companies who didn't need the loan shouldn't have gotten the loan.
Right. And
they talked a lot about who should have and who should have not have gotten it. And I've got a lot of clients asking me, should I be paying this money back?
Right. So in the Treasury's FAQ number 31 and number 37 address the question, and those questions seem to be aimed at publicly traded companies and companies owned by private equity vehicles more specifically, but I think it applies to everyone in that, a borrower has to make the certification that current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. What exactly does that mean? That's pretty darn open for interpretation. You have to make that certification in good faith. If you determine that that in fact does not apply to your situation, there is a safe harbor to repay the amounts dispersed by May 7th, and you're free and clear on that. So
yeah, but economic uncertainty, we don't know if that means today or that means 2 months from now.
What's foreseen in the future.
We don't know what uncertainty means, and I think this is another reason you need to talk to your specific tax advisor at all times with these things. This is not any kind of a statement that you should or shouldn't.
Yeah, we definitely can't make a blanket statement on that. It applies to each individual and individual company's specific facts and circumstances.
Michael, I'm going to skip down to the agricultural and farmers. Right. There's been a lot of questions as to whether farms don't file a Schedule C. And they talked about Schedule C's, and so I've got a local farmer, I've got a client who's a farmer down on Schedule F. Can he apply for a PPP loan?
Short answer is yes. Farmers and ranchers do qualify for PPP loans. There's some alternative size requirements, but I mean, suffice it to just say, the short answer is, your average small farmer and rancher, yes. I mean, your mega agro industry companies, no. Right. But your normal farmer and rancher that you and I deal with on a regular basis, they're going to qualify.
All right. So the only other kind of FAQ we wanted to talk about was the loan forgiveness. What if I laid somebody off back in early March when we all had to go to shelter in place? I want to take advantage. You guys talked about if you rehire that person, you can take advantage of that and be able to rehire them, and you won't have a reduction in your loan forgiveness. So what if I rehire them? I try to rehire somebody and they refuse, and they tell me I'm not coming back to work.
We're hearing this from a lot of people. The question that people are concerned about is my folks. I laid them off because I couldn't carry them before we knew about the PPP and had that in place, and they filed for unemployment, and they're getting the unemployment plus the federal additional unemployment, $600 a week, and what I offer them, paying them back at their full rate, is less than that, and they don't want to come back to work. So what Treasury has come out and said is that they intend to issue another interim final rule that provides an exclusion from that FTE calculation of reduction in headcount, essentially, that would provide a percentage reduction in the loan forgiveness, but to provide an exclusion for individuals who received a bona fide offer to rehire written and have a documented rejection of that offer to rehire. Those individuals will be excluded from that headcount reduction calculation. Has to be an offer to rehire for the same salary, same wage, and the same number of hours, and then also it notes, and I don't know how this will work, but it says employees and employers should be aware that employees who reject offers of reemployment may forfeit eligibility for continuing unemployment compensation. So that's a complicated thing,
and that's getting a lot of agencies to work together there, because the problem is this is a federal deal. Unemployment is done by Texas, state of Texas, and so now you have to coordinate Texas and the federal, and Lord knows they don't talk very well to each other all the time anyway.
Yeah, so. and I mean, I know I've heard this expressed to me. A business owner says, I don't want to be the bad guy that says, hey, we're gonna get your unemployment revoked, where you're getting more than you would have gotten working for me. Mm-hmm. That puts the business owner in an awkward position. One alternative that we're investigating is the shared work program under the TWC.
Right.
And that, it's more than we can go in depth here, but we do know that the shared work program is where somebody works a fewer number of hours, a reduced number of hours, and does actually work and receives a wage and then gets a supplement from the TWC. And we know now that shared work program, as long as they get a benefit under it, as long as the employee gets a benefit under it, they still qualify for that federal additional unemployment. So there may be a way to have a win-win for the employer and the employee under that situation, which still qualifies them for that federal additional unemployment. And you can get them back to work so they can do the work that you need them to do.
Right.
So that's a complicated program. I think it takes a while to get it in place, and TWC is already overwhelmed, so there's a whole lot of caveats there, but we do know that program does qualify.
Right.
So that's something you may be interested in.
Shared work it's probably a pretty good idea. Yeah. Is there anything else we wanted to kind of go over today before we kind of sign off?
I think the big, to me, the big thing is there's still funds available.
Absolutely.
If you need it, go get it. And then also we wanted to talk about how do we keep the books on this type of thing.
Right.
So, we talked about previously, you know, when you receive the fund, report it as a liability, just like you would any other loan. When you finally submitted the forgiveness app and got that approved, whatever form that looks like, we still don't know yet.
Right.
Then you would record another income item clearly described as PPP loan forgiveness and reduce the liability. Now that we know about these, you know, the potentially non-deductible expenses, it becomes maybe, I mean, we're going to want to look at your forgiveness application. When we're doing the taxes, we're going to need that now.
Absolutely. That forgiveness application will be important for
because
our
we
tax
need to know
preparation.
what expense categories, assuming that the notice holds regarding the exclusion of those expenses. But, you know, if you're using QuickBooks and you're not already using a class for something, you might create a PPP expense class, or
I think you could probably put a memo. If
a
you
memo.
if in a memo, just putting PPP loan in the
Right.
memo. That way we can
Right.
sort by that and be able to easily find those expenses. That's going to be the very important thing: is what expenses did you use the funds for, and to help you pay your expenses. And we'll need to know that whenever we're preparing your return next year.
It's
So
more,
keeping
and it's
that
more
today,
important now.
right?
Yeah,
Keeping that starting today is a whole lot more important because it's going to be harder to remember 6 to 9, 10 months from
Right.
now.
So keep a good spreadsheet. Keep memos or notes in your actual books and records. You know, if you're using a separate account, use a separate account. Some banks are requiring it, some aren't, but we think it's a good practice.
We do. I think that good practice is because the ability to have the separate account just lets you kind of quickly see in a snapshot how much money do I have left in these funds,
Right.
how much do I, one, need to spend, two, how much can I spend, and how much is out there, how much are forgiveness. It's not going to be an exact number, but it'll at least give you a guideline and
I mean,
guidance.
the other benefit of that too is some people are concerned, you know, they don't want to take any more than what's forgiven.
Right.
Well, that's a pretty simple way, because you do your forgiveness, you learn how much of forgiveness, how much is left in that account, that's the amount I need to pay back.
Right.
So if people are concerned about that, which I've heard people express that
Sure.
concern, that's a good way to do it.
Yep.
So,
Absolutely.
you know, keep your records, please.
Absolutely. Please. We say that all the time, but now
We
is
really
even
need
more
it.
important.
We
We
really
really
need
need it. Really need it. So, well, Michael, thanks for taking some time today. I
Yeah.
think hopefully this has been helpful for folks. Hopefully you're able to got a couple more of your questions answered. We're going to continue to do some of these things and hopefully continue to give more information on a timely basis for you. And we appreciate you tuning in today, and hopefully we'll see you soon. Thank you very much.